Welcome one and all to Global Money Talk, brought to you by Sam Pro TV. Greetings as always to all of our viewers from across the United States, Korea, and all around the world. We are coming to you as always live from the trading floor of the New York Stock Exchange here in New York City, the financial capital of America. I'm your host today, J.D. Durkin, and today I am joined by the great Tai Wong, independent proprietary trader. My friend, happy early Thanksgiving.
Oh yeah, it's a great day, beautiful day today.
Great to have you. What a special day.
It is, and I notice I love your outfit. A little green there, and is that a Slytherin tie?
It's a Harry Potter Slytherin tie.
Wow.
Yes, it absolutely is. I'm a very serious journalist, Tai, if you haven't noticed. Yeah.
You're a serious Harry Potter fan?
And a serious Harry Potter fan as well.
If I had a house, I would be Slytherin.
You would be Slytherin?
I would be Slytherin. Come on, look at the business I'm in. I mean, there's going to be a little winking
a
a
lot
nod
of
here and there.
Slytherins out here down here. Yeah, that's true. I think that it tends to resonate. So maybe for next Thanksgiving, I'll try and hook you up with a Slytherin tie.
All right, that would be awesome.
For your next visit. There's no shortage of exciting things to talk about, both the fun stuff, the holiday stuff. We'll get into all of that.
Yeah.
But it's an interesting week in terms of data, especially because a lot of these pieces of data that we get on a Thursday or a Friday, get all the government officials, they're like, shortened holiday week. We're going to kind of dump it out there on Wednesday morning. So I'm going to take your lead. Talk to me about which data point you kind of want to start the conversation with. And it really does set the stage for a pretty interesting trading week overall, I think.
So the data that everyone was looking for today was core PCE, so consumer expenditures, and it's the preferred inflation figure for the Federal Reserve, although CPI gets all the headlines because CPI comes out a couple of weeks earlier. And then with CPI, PCE there's usually not too many terrible surprises in PCE because you've seen CPI, and they actually use kind of the same inputs, although shelter is almost twice as big in CPI, so housing and rent and whatnot, as it is for PCE. So PCE came out today sort of right on expectations. The headline CPE year on year, 2.3%. Not far from the 2.0% that the Fed is supposedly looking for, but the core is still trucking along at 2.8, and that's probably a little bit higher than where they really want it to be. Now, I think it's not troublesome for them. They think it's on its way back to 2, and if it's sat here and if it's down a couple tenths, if it's up just a little bit, as long as you get a 3 handle on core PC, I think they're actually pretty comfortable with it. And personal view, at some point they're going to maybe nudge the 2% up to 2.5 at some point. They can't do it yet. They'll have to wait for a better time to do it. But PC, should make everybody happy. The market's really barely moved on it. So a couple other things we had: personal income and spending, which I like because retail sales gets all the headlines, but personal spending is actually goods and services. So that's 2/3 of the economy, and it's actually a much more interesting, much more complete picture. And both of those ran a little hot. Something to keep an eye on, I think, for the Fed and for the market. But right now, everybody's just pretty happy. Nothing terribly surprising.
Does it? If you don't mind me asking, what does that tell you about where consumer confidence is? Because we've seen the surveys. People feel sour about their own contributions, their own role in the U.S. economy. They don't feel great about a big picture scenario. We're still coming off these higher than average interest rates we've had relative to the last few decades. But to your point, confidence month over month, maybe ticking back up, and clearly spending does tell us a certain type of story despite what a lot of the other narratives out there are.
I think confidence is ticking higher because you're going to have an administration that's going to be business friendly. They're going to have both houses of Congress, but I always laugh. The Republicans couldn't get out of their own way for anything. These guys are the masters at snatching defeat out of the jaws of victory when it comes to legislation because they bicker, incessantly between themselves. I mean, you still have some of the Tea Party holdouts, and a lot of spending bills. Even in this term, and like the last term, probably need Democratic votes to get through, especially in the House of Representatives, where I haven't checked it recently because I think the Californians are still counting votes, that's a kind of a disgrace.
It's been a while.
It's been a while. So the majority may be 4 seats, 5 seats, whatever it happens to be. But I think overall you're going to get less regulation, fewer sort of less regulation, probably similar taxes. I don't think they really can be lowered much at this point. So I think the market, the consumer feels a little bit better. How will that last beyond last past the Christmas season? Really too soon to tell. We're seeing we'll get to it in just a little bit, but the cabinet's really taking shape and the market likes it. But as you say, you rightly point out, confidence is ticking a little bit higher, and in the financial markets overall, it is a confidence game. Or do people feel good about where the markets are, feel good about themselves?
Yeah, and they're not the only data points we got. I'm curious the other ones that jump out to you. Obviously, we got GDP, we got durables. New home sales was a big one from yesterday. We can get into it, but any of those first two, I wonder that jump out to you to help kind of further set the stage ahead of the Thanksgiving holiday.
So I think weekly claims, it's 213K, bumping along the lows. It was also low last week, which was actually more important because last week was the survey week for payrolls. So this suggests that we're probably going to get a nice sharp bounce in payrolls from last month, which had all the hurricanes and all those disturbances in it. So what the Fed has been saying is we don't want to get any softer, but we're pretty happy with where the employment situation looks right now. And if inflation is not out of control and inflation's right here, we can take our time, cutting rates, which is what Powell said, which kind of turned things around. People were really a little more dovish until he said that, which was interesting. He's trying to set up December to be a little more of a coin flip. It's a little odd. They don't usually like coin flips, but we checked before the odds of a rate cut. The market is pricing 70-30 for December. It's probably right. Get one cut in, and then now you've got to wait for the new administration, and you can probably wait a little bit in the beginning of the year.
Yeah, and it's going to be really interesting to watch to what degree Fed officials are willing to say we still need to take our cues from the change in spending policy for a new conference, right? Or for a new Congress. The 119th will be seated in early January. Obviously, the new incoming Trump-Pence administration. What does that mean in terms of between the conversations of tariffs, additional tax cuts, deportations, what that might mean for the state of the U.S. labor force and wages. And I think all these things are going to be, that's a big challenge for the FOMC.
Big challenge. So it's good for confidence right now to have, we're on a nice holiday.
We have answers.
Right, but we don't know what's really going to happen after January 20th. So we'll have to see. But you did mention new home sales and yesterday, that was really awful. I think if not maybe the worst in a year, but if not the worst, very, very close. And that's just a factor of lack of supply and mortgage rates in many places at 7 or maybe even a little bit above 7%. And you're not just going to get houses flying off the shelves, so to speak, at those rates. Plus, it's the wrong time of year as well, so it doesn't really help.
Yeah, we saw those sales of new U.S. single-family homes dropping to their lowest level in nearly 2 years, given that reading that we saw yesterday. So that kind of tells you about, for all these conversations we had, not just tied to the U.S. election, but about the state of the housing market, trying to increase that supply. I wonder, in terms of housing, Tai, what else you will kind of be watching, either more direct or even in the background, the types of data or bits of information you think that you'll be tracking as we head into 2025?
I think we have to get into the spring selling season. We had a mortgage expert on last week, and he really said to really get things moving, you really need rates down at 5%, the mortgage rates down at 5%. That's 200 basis points. Oof. I think it is a long time before we're going to see that. I think we could see them relatively easily, sort of closer to 6, 75, 100 basis points lower. I think that's going to free up a lot of folks who said, listen, we've been waiting to buy this house. It's the spring, time to buy it so we can do the refurbishing or actually the new home sales in case it's not even refurbishment. We can move in and then in time for the kids to go to school in August and September. That's why the spring and the summer are such great selling seasons. It's like you don't want to move the kids in the middle of the school year. But I do think what we need to look at really is, will rates come down a bit? Because at 7%, that's a lot of house is going to be out of reach. And similarly, if you own a house now and you wanted to sell it to upgrade, you don't want to switch your 4 or 5% mortgage for a 7% mortgage. So that's holding supply down. So I think really we'll have to watch where the mortgage rates are is the biggest thing in the coming few months for new home sales and even existing home sales.
It was a fascinating piece of economic data to get yesterday. As we always say, it helps fills out the narrative. It gives us a bit more of a complete story. And what an amazing week. I mean, to get all these data points, but we're still talking about a week that has very low trading volume, understandably so. People already today, as we're having this conversation, it's the eve of Thanksgiving here in the States, and people are saying, maybe I'll leave a little bit early. Maybe I'm not going to be as inclined to call my broker the day before Thanksgiving. That brings us to Black Friday. The markets are only open until 1 o'clock. Maybe we skip a few days where we look to come back early next week and look to pick volume back up. Outside of a rebalance, we did have a big rebalance here through Morgan Stanley on Monday afternoon. So into the close, I noticed we really accelerated volume up in the 2 and 3 o'clock hour. But for the most part, as you know, it's a pretty quiet week here on Wall Street.
It is. I mean, I drove to the train station. I want to say it was 15% of the normal volume of parked cars. So it's a lot of folks who are saying, who've either traveled and said, we don't really have any terrible surprises coming up. Let's take it easy this week.
Believe it or not, I got a seat on both my trains this morning, which really tells you something, because I never do. I take 2 of the busiest trains in New York City. I never get a seat.
Sorry
the day before Thanksgiving, I was sitting comfortably on
like,
both. That
great,
tells you,
it?
very few people coming into work today. We got a lot of other exciting things to talk about, and obviously, I think here, Tai, one of the big things that has been moving markets and has been of high interest to casual news consumers and investors alike, the incoming administration's cabinet picks. Former President-elect Donald Trump making a few of these picks. You want to start with Treasury? That's a big one.
So the big one. This was the one that everyone was waiting for, and apparently there was a big arm wrestling. They had Cantor Fitzgerald, Howard Lutnick really wanted it, and I think there were a couple of people. I think Elon Musk was cheering him on, and they're calling the grandchildren are calling him Uncle Elon because he's always around, right? So it was a pretty smart move by Elon. He certainly picked the right horse, but Scott Bessent, who was a former CIO of Soros, worked for Soros for a long time. Actually, an interesting background. Actually, donated to the Democratic Party a fair amount. I think Gore and Kerry was some of the genius behind the success of Soros' funds, although the two of them didn't really agree on politics, but very successful, has his own hedge fund group, but really an interesting individual, very erudite. He taught economic history at Yale Law School. He's written some really interesting stuff in terms of articles, but somebody who's really up on economic history and knows in that seat. You really need someone who, if there's a crisis, knows exactly what's going on. I mean, I think Bessent probably helped precipitate a crisis or 3, so he'll know in that seat what needs to be done. And the market really liked it because he's got he's like the steady hand on the tiller of possibly the most important portfolio as we move into this new administration. His idea, how do we deal with tariffs? How do we deal with deficits? How do we fund our, the interest on the debt? And the interest on the debt right now is bigger than what we spend on defense. It's almost $1 trillion, just a little bit ahead of defense. And he's got a plan. His 3-3-3 plan. He's targeting 3% GDP growth. He wants to get the fiscal deficit down to 3% of GDP, and then also pump 3 million extra barrels of oil a day for the United States. And the market reacted like I've never seen a market react like this to a nominee for Treasury Secretary. It's like the second coming of Robert Rubin, who was Clinton's Treasury Secretary, became something of a legend. Former CEO of Goldman Sachs, really, he always said the strong dollar is the American policy, and he said it with such gravitas that people really believed it. And it was great days in the 90s. So really, I've not seen something like that. Gold dropped $100 on Monday because of the announcement. Yields were down 13, 14 basis points in the 10 years. They're rallying again today. So it really feels like the market is feeling like, wow, we got the guy that we want. He really knows what he's doing. We have confidence in him. And it goes back to the confidence that we were just talking about a couple of minutes ago. So that was really good for the market. He also said something interesting. He said the tariff gun should always be loaded and on the table, but rarely fired.
Yes. He's communicating a bit of perceived restraint.
Yes.
And I think that's been the big concern, right, for a lot of investors in the major markets to listen to the way that President-elect Donald Trump is more inclined to talk about tariffs. But then again, it didn't wait very long, though, for Trump to swiftly come out as sort of a reminder to folks to say, hey, you may like what my cabinet officials have to say. Let's not forget where the buck actually stops.
Right, right. So that was a little blip yesterday, but I think the market is hoping that this guy actually sticks around. He doesn't have a huge fight with the president, and sort of has to resign or resigns very quickly. I mean, I remember, this is different portfolio, but the Attorney General Jeff Sessions didn't last very long, and then it was sort of a parade of Attorney Generals after that. So I think, if the market reacted this well to him getting the nod, it's going to react very badly if he decides I can't deal with this. But certainly, as you say, he came out and said, I'm going to put these tariffs on, and I think the Canadians were, we don't not a lot of illegal immigration comes through us. It's mostly down there. So can you sort of not? Was kind of an interesting conversation there. But some people trying to go for a more nuanced read are saying, well, he's saying tariffs and migrants and fentanyl issues. It means it's actually he's going to use it for negotiation rather than actually slam these things on. And I think people are hoping that Bessent will give him good advice and he will actually listen. But really remarkable, like the second coming.
Yeah, and there's been no shortage of remarkable storylines with regards to President-elect Donald Trump's other cabinet officials, and whether you're thinking AG, Department of Labor. I know you got thoughts on a few of these key names, and some of them, obviously, some of them have had their fair share of controversy, but some of them a bit counterintuitive, arguably.
Exactly right. Well, when Matt Gaetz sort of pulled out, I think everybody sort of breathed a sigh of relief. He wasn't, he probably wasn't getting through the Senate, and I don't think the president wanted to spend that much capital trying to get him through. But then he digs into Florida again. The former Florida Attorney General Pam Bondi, who not a surprise because she's probably really tight in with Susie Wiles, who's been a Floridian and who really is the chief of staff, the new chief of staff. So generally quite well received. In fact, she got the compliment from the other side of the aisle saying she's a problem because she's competent. Which is you'd like to hear. But then the other one is the other sort of head scratchers. The woman running the Department of Labor is current, soon to be former because she lost her election, Oregon Republican Lori Chavez de Remer. And when that name came down, people were like, huh? It wasn't the sort of Matt Gaetz, ooh, but it was really like, huh?
Yeah, right.
Because she was a big backer of the PRO Act, which does a whole bunch of things. So it's very sort of union supporting, and it also potentially would wipe out right to work where it exists in sort of 25 states. This is the polar opposite of what most of the party wants. So people are saying, why? This is just unusual. Is it a sop to the Teamsters who sort of didn't really didn't endorse the Democratic candidate, and some of the other unions who supported him? But this is unusual. She may not actually confirm, and I think if she actually confirms, it will be with Democratic votes because the Democrats are actually way happier than the Republicans with this pick. So, we'll see how that goes. But that was an unusual one for sure.
It would be an interesting scenario given the Republicans are expected to have 53 seats in the U.S. Senate. Imagine you got a handful of Republicans, the president's own party, saying, I'm not going to support this nominee, and you get a handful of Democrats who may end up pushing the representative from Oregon over the finish line. The AFL-CIO is on record in support of the nomination, but still issuing words of caution, saying Lori Chavez de Remer has built a pro-labor record in Congress. That's the good part. They go on to say, however, but Donald Trump is still president-elect. It remains to be seen what she will be permitted to do as secretary in an administration with a dramatically anti-worker agenda. What a fascinating pick.
Right. And then lastly, Randy Weingarten, who runs the teachers unions, who was the bête noire of the entire Republican conference, came out and said, I like this pick. Yeah, so that'll be an interesting sort of mini drama. I mean, Department of Labor is actually quite important. I mean, it's not Attorney General or or Attorney General or Treasury, but this is a little side drama here for us for Christmas.
Yeah, absolutely. Talk to me about what else is on your radar. I know there's no shortage of things going on for Fed officials in particular. I mean, obviously, when certain, we call them Fed heads, Fed heads or members of the FOMC speak, we tend to listen, even if they're not voting members. They might just be alternate members, but obviously it's such a interest rate contingent market. We follow every spoken word, right? You talked about Powell earlier in the show. He says one little thing, markets are going to have a multi-day reaction. What have you heard from some Fed officials in recent days?
So Neil Kashkari, who's not a voter, the president of the Minnesota Fed, said, "Well, it's an open meeting. We can, we can either cut or not cut," which is not really a surprise. He's really a little bit. He's an interesting character. Was a little hawkish when he got in, but then became very, very dovish, and then hawkish again. Really smart guy, ex-Goldman guy, actually worked for Henry Paulson in the aftermath of the financial crisis, ran as a Republican, sort of a moderate Republican for the governor of California, soundly trounced, but I actually met him, a really nice, thoughtful, smart guy. So he says it's a live meeting, so that really doesn't surprise anybody. Austin Goolsbee, who's a former Obama government official, who's the head of the Chicago Fed, is cut. We have so much cutting that we can do, and Trump really likes lower interest rates. He is probably the right guy for Trump, but that'll never happen because he was formerly with the Obama.
Can you imagine that, Austin Goolsbee chosen by Trump? That would be.
Yes,
I couldn't imagine that because he's synonymous with Obama. That's one of those things I remember in the last few years. You did not have very many issues where the Elizabeth Warrens and the Elon Musks of the world were in agreement.
Yeah.
But they really wanted to see the Fed cut interest rates for different reasons.
Yes.
But they were both on the same page to say, well, we actually ironically agree that this is the path forward that the Fed should take. But obviously a lot of given concerns. And to our point, we're sitting here still talking about core PCE being at 2.8%. We're not quite at that 3 handle. I shudder to think what would happen if we get these December, January, February numbers and we start to be going the wrong direction. Now It's a way different conversation.
And you hit it exactly on the nose. That's the right point, and I think that's what the Fed is thinking. We can sneak one in right now. Pretty much everybody will agree that we're probably above. We're well or certainly above what the neutral rate is. People think it's 3%, but we're at 4.5 to 4 3/4. Let's sneak one in while we can, because what they don't want to do is, have some policy like tariff policies or whatever it might be, or tax cuts that can't be really, that aren't really paid for, despite what the Senate might might be lobbying for. And now you have to raise. They don't want to cut, they don't want to cut too much and raise rates again. So I think they cut in December. They sit in the first part of January through March and see what happens. But sneaking one in right now feels like it, but I always joke Nick Timiraeus is worth every penny he's paid, because when the Fed wants something, they just whisper it to him and he writes an article and you just follow the guy.
I know there's something special with about the time we got left. I want to make sure I give us enough time for you to read something that I know is kind of comes up seasonally from time to time. It's, we love capitalism. What is it? When is it from? And why is it important to you, especially this time of year?
Well, so this is actually, I think I think we can get a little time the day before Thanksgiving, so I'm not too worried about it. So this is written by a conservative columnist named Jeff Jacoby from the Boston Globe. He wrote it in 2003, and a newsletter that I subscribe to, and the writer is actually going to be on the show in a couple of weeks. It's called Giving Thanks for Capitalism. And I do want to read it. And mostly it's in entirety. It's about 5 minutes, but I think it's really, really worthwhile. So bear with me here. Gratitude to the Almighty is the theme of Thanksgiving, and has ever been since the Pilgrims of Plymouth brought their first good harvest. Instead of famine, now God gave them plenty, their leader, Governor William Bradford, later wrote. And the face of things was changed to the rejoicing of the hearts of many, for which they blessed God. So the annual presidential Thanksgiving proclamations always invoke God, and they frequently itemize the blessings for which we owe him thanks. Today, in millions of homes across the nation, God will be thanked for many gifts: for the feast on the table and the company of loved ones, for health and good fortune in the year gone by, for peace at home in a time of war, for the incalculable privilege of having been born and become an American.
There's your camera right there if you like.
But it occurs, but it probably won't occur to too many of us to give thanks for the fact that the local supermarket had plenty of turkey for sale this week. Even the devout aren't likely to thank God for airline schedules that made it possible for some of these loved ones to fly home for Thanksgiving. or the arrival of Master and Commander, that was 2003, or in this case, Bonhoeffer, which is the great movie for Thanksgiving that's coming out for the holiday weekend, or for the great cranberry apple pie recipe in the food section of the newspaper. Those things we take more or less for granted. It hardly takes a miracle to explain why grocery stores stock up on turkey before Thanksgiving, or why Hollywood releases big movies in time for the holidays. That's what they do. Where is God in that? And yet, isn't there something wondrous, something almost inexplicable in the way that your Thanksgiving weekend is made possible by the skill and labor of vast numbers of total strangers? To bring that turkey to the dining room table, for example, required the efforts of thousands of people. The poultry farmers who raised the birds, of course, but also the feed distributors who supplied their nourishment and the truckers who brought it to the farm, not to mention the architect who designed the hatchery, the workmen who built it, and the technicians who keep it running. The bird had to be slaughtered and defeathered and inspected and transported and unloaded and wrapped and priced and displayed. The people who accomplished those tasks were supported in turn by armies of other people accomplishing other tasks, from refining the gasoline that fueled the trucks to manufacturing the plastic in which the meat was packaged. The activities of countless far-flung men and women over the course of many months had to be intricately choreographed and precisely timed, so that when you showed up to buy a fresh Thanksgiving turkey, there would be one, or more likely, a few dozen waiting. The level of coordination that was required to pull it off is mind-boggling. What is even more mind-boggling is no one coordinated it. There's no turkey czar that sat in a command post somewhere consulting a master plan and issuing orders. No one rode herd on all these people, forcing them to cooperate for your benefit. And yet they did cooperate. When you arrived at the supermarket, your turkey was there. You didn't have to do anything but show up to buy it. If it's not a miracle, what should we call it? Adam Smith called it the invisible hand, the mysterious power that leads innumerable people, each working for his own gain, to promote ends that benefit many. So out of the seeming chaos of millions of uncoordinated private transactions emerges the spontaneous order of the market. Free human beings freely interact, and the result is an array of goods and services more immense than the human mind can comprehend. No dictator, no bureaucracy, no supercomputer plans in advance. Indeed, the more an economy is planned, the worse it is plagued by shortages, dislocation, and failure. It is commonplace to speak of seeing God's signature in the intricacy of a spider's web or the animation of a beehive, but they pale in comparison to the kaleidoscopic energy and productivity of the free market. If it is a blessing from heaven when seeds are transformed into grain, how much more of a blessing is it when our private voluntary exchanges are transformed without ever intending it into prosperity, innovation, and growth? The social order of freedom, like the wealth and the progress it makes possible, is an extraordinary gift from above. So on this Thanksgiving Day, tomorrow, and on every day, may we be grateful.
Here, here. Very well done, my friend. That's an incredible. I'd never heard that before.
It's amazing.
That's awesome.
You know what? Capitalism finds a way, right? Everything works. Nobody plans it. Imagine if you tried to plan it, you'd probably mess it up because it's so complex. But let the profit motive and the invisible hand of the market, for which we have this show, we have to thank because we have this show and we can come and talk about it. I really enjoy it. So I think it was just worthwhile reading it almost its entirety.
And it's amazing context as you settle down with your family and your loved ones for a day like tomorrow or the holiday, either weekend or broader holiday season. You think about, the blessings of the food and the different things you get and how many people have been responsible up and down that supply chain to make sure that bird, that stuffing, those desserts, that's my favorite part, winds up on your table.
Yeah, that absolutely is true. Before we go, let's take a quick look at the markets.
Absolutely.
Where we are today. So one of the things that I do want to take a look at is let's look at NVIDIA. Actually, we have Dow Jones Industrial Average up.
Which NVIDIA is now a part of course.
Yeah, the markets are doing quite well. The S&P 500 is above 6,000 and grinding higher. The S&P 500, I should say, a little below 6,000 now, but generally doing very well. The S&P 600, which is a small caps, have turned recently and done quite well as well. Here's the NASDAQ at 19,000, down a little bit on the day, but I think, as we mentioned before, the volume is a little bit low. I know we can get the NVIDIA chart. That would be great. Worth a little comment there. So NVIDIA got up to about, I want to say about 150, and it's pulling back a little bit now. It feels like they had a great earnings report. Mm-hmm. The market's a little bit spoiled. Tech is having a tough day, as we mentioned before. I think we could see it down to maybe 120, 125. I don't think it's certainly going to retrace very, very deeply. NVIDIA, as we discussed last week with Dan Ha, has a broad and pretty deep moat. I don't think anyone's going to challenge them for years to come, and they can't supply all the demand they have for all of next year. So I think it's a buy the dip in NVIDIA down to maybe 125 or thereabouts. I'd love to take a look at oil if we have that. Oil is skimming down near recent lows. In fact, if you look at a 5-year chart, it's actually near the lows since the rally from the pandemic. Brent, which is the European benchmark, is similar, and part of that is actually peace breaking out, or peace trying to threaten to break out. The Israelis and Hezbollah have a ceasefire. Mm-hmm. Maybe that stays and for some time. Maybe we finally get, before Trump gets in or when Trump gets in, maybe they sort out this problem with Hamas and people get their hostages back once and for all. But demand in the global economy isn't great. You can't rule out another pullback in crude oil, a panic pullback down to maybe $60, and then maybe it bounces. But crude can be a little bit of a tough one. I'm a little concerned about the downside right here, even though we bounced off these levels. And then finally, I'd love to take a look at Bitcoin. I said last week, and I was laughing with Remy on Thursday, I said, we're going to probably hit 100,000 any time now, right? And then I said, right there. What? And I said, I'll be the silliest man in the world if it doesn't hit 100,000. Guess what?
It has not yet hit.
It has not hit 100,000. It's pulled back a bit on sort of the exuberance, not quite hitting 100,000, a little bit of profit taking, exhaustion. I mean, we've had a tremendous move, got down to I think around 91 or 92,000. There are a lot of Bitcoin bulls in there. We had Sean Farrell, who was head of Fundstrat's Bitcoin strategy, say that one of the things that's really important that I hadn't actually realized was this administration actually sort of had their foot down on the banks to say, we don't want you to lend to crypto. Mm-hmm. So you don't usually say no to the administration if you're a major bank. You just don't want them to work a little too hard looking at sort of the things that you're doing. But he expects that this is going to be removed as soon, if it isn't already removed. So he sees a pretty good future for crypto, maybe even a target of something 125, 130,000 for 2025, if not even a little bit higher. So I think crypto is, you could certainly see a retreat. I think the way that Bitcoin trades, I mean, it'll move $4,000 over the weekend because it trades and liquidity isn't great. Could I see it at 85,000? Sure. Do I think it's probably going to go higher next year? I do think so.
People may see it at 85. They may also envision it at 110, 115 and change. I mean, it's wildly volatile. To your point, obviously, new regulatory regime starting to come through for agencies like the SEC in the new year. Right. We know we'll have a new SEC chairman. That's right. Gary Gensler's days are numbered. He has admitted so. He's admitted as much himself. And new rules of the road, right? Even clearly defining what to security, what to commodity. The Bitcoin. If you are a Bitcoin bull, you've been a bull for a long time, and you've seen many iterations of this. But certainly an exciting time. Even if for nothing else, that psychological mark of 100,000 is a fun story, and could get it right. Maybe happen Thanksgiving Day. Yeah, I may text you tomorrow and be like, here we go, we made it happen.
I just don't want to be the guy who said it's going to be any time now at 100,000.
Just you wait.
I don't want to be that guy.
You never know. It is a fantastic show. I could do this with you for many hours every day, but what a pleasure. And I send my absolute best to you, and I know your family's down here as well for the Thanksgiving holiday. Tai Wong, what a pleasure. Really
Thank you so much.
Being on the desk with you.
Great to see you again.
Of course, absolutely. Folks, that's going to do it for Global Money Talk, live from the trading floor of the New York Stock Exchange. We are so thrilled to bring you daily coverage here on SAMPRO TV. As always, you can check out the show anytime on our YouTube channel by searching Global Money Talk. Thanks as always for being here. We'll be back on Monday. Happy holidays and have a great week.